So by way of introduction, my name is Nigel Feetham. I am a partner at Hassans International Law Firm Limited. I am the head of the financial services department within the law firm, which includes all areas of financial services activity, including crypto. I've been a regulatory lawyer for 30 years in Gibraltar. I've also been a non-executive member of the Gibraltar regulator, the Financial Services Commission, for 6 years, and I'm currently a member of the FSC's Decision-Making Committee, which is a quasi-judicial body of the Gibraltar Financial Services Commission. I have been a visiting professor of a UK university and published a number of books, and one of my books has been cited with approval by the Federal Court of Montana. That's my background. Thank you very much, and I look forward to this discussion. If I can introduce my panel members or ask them to introduce themselves. Mark, go ahead, please.
Yep, sure. Hi, everyone. My name is Mark Robinson. I'm the sales director and head of the technology practice at Verlingue. We're a top 15 European independent insurance broker, general corporate, but I specialise in the fintech, crypto, and gaming arena. Been in insurance for just coming up to 20 years now, and involved in fintech for before fintech was fintech, really, when it was traditional financial institution work. So yeah, that's me.
Hi everybody, it's nice to be here. I'm Steve Lawler. I head up Aon's office in Gibraltar. For those people who, I don't know, hopefully everybody's heard of Aon, but if you haven't, we're a global insurance, reinsurance broker. We also do healthcare, pensions. I would guess somewhere in your lives, Aon will touch you somewhere, even if you don't know it. We have, we employ 50,000 people across the world. We're in 120 different countries. And we touch every single top 500 companies in any stock market indice that you want to think about. I've been in the industry 35 years. To put that in some context, I'm probably the oldest person in the room. And when I started in the Lloyd's market, in the Lloyd's insurance market, we didn't even have desktop PCs. And I can remember that. We used to use fax machines and handwrite everything, so let alone a mobile phone. So that's me.
Hi, good morning or good afternoon. I'm like probably the most non-technical person in the room in this sort of very blockchain and technical-centric focused conference. I'm a former criminal investigator. I'm the co-founder of Asset Reality. We're the company you don't ever want to meet. If your crypto gets hacked, we're the people that investigate it. If the FBI seizes your assets, we're the person that manages the assets. So we're here to talk about the catastrophic side of crypto when it goes wrong, and hopefully where the insurance industry sort of blurs the gap. In terms of sort of dog years, I managed the first crypto seizure in the UK and in Belgium back in 2016, 2017. So that was sort of my introduction to the managing Bitcoin and crypto assets.
Thank you very much, guys. Thank you for that. What I would like to explore in this discussion is how can we bring the insurance and the crypto sectors together? It seems to me there's a huge opportunity here for both markets. Now, we've heard a lot about crypto over the last 2 days. Gibraltar clearly has been at the cutting edge of all developments. We established a regulatory framework in the DLT crypto space 3 years ago, which has set international standards. We've got some of the top professionals, including my colleagues that were here on the stage earlier on. What most people probably won't know is that Gibraltar has been an insurance domicile for well over 20 years. At one point, Gibraltar had over 100 insurance entities established and licensed in Gibraltar. So we've been an insurance domicile. There's a lot of capital out of this jurisdiction, insurance capital. Another impressive statistic, which I think will put things into context, is this. Gibraltar insurance companies, motor insurance companies in Gibraltar, account for 30% of the motor insurance market in the UK. In other words, at least one in every 4 policies, motor insurance policies underwritten in the UK are underwritten by Gibraltar insurance companies. So, clearly there is potential for synergies between insurance and crypto. And that is something that I would very much like to explore. Mark, if I can, you're an insurance broker. So clearly you are involved in this particular space. We've heard that you've been involved in this for a number of years. Tell us, what is your experience in placing insurance for crypto clients? One of my experiences certainly in this market is that lack of knowledge, the lack of more knowledge amongst underwriters. Why is that, Mark? Why do you think there's this lack of knowledge, and what do you think we can do in order to better educate the insurance sector of the enormous opportunities in this space?
Yeah, that's exactly right. So I think everyone in this room, if we've tried to get insurance from a crypto perspective, it's nigh on impossible, or it's been pretty damn tough for the past few years. And what you say is exactly right. It's about education. What we find at the moment, albeit it is getting slightly better, insurance companies, the underwriters, simply don't have a vast amount of knowledge in this sector. And because of that, they therefore don't want to put the head above the parapet and take the risk on. Now, the lack of understanding is down to the lack of education. One of the things that we're trying to do with more success with some underwriters than others is give them that education. So we, as a broker, it's our job to sell your risk into the insurance market, sell it into the underwriters so that they understand what they're writing and have that clarity around the business and so they can correctly gauge the risk. One of the things that we do is we go in and sit with our clients or prospective clients. We get a full understanding of what it is that they do, a full rundown of the business operations, who's sat on the board, what the risk tolerances are, and what the plans are moving forwards, really. Doing that enables us then to go and sit with an underwriter and say, well, actually, if you break the risk down or you break the business down, it's not too dissimilar to a general fintech risk. So here's where potentially the claims may come from. This is what the claims quantum may look like. We're looking at security of where assets are held, where security on systems. So it's that educational piece, and we as a broking sector, we need to get better at doing that with underwriters. Underwriters will quite happily sit and underwrite the business they've written for many years very profitably. And they sit there and think, well, why should we take a risk on something new, on an emerging sector, which is still what this is really. And
Mark, just so that the audience is clear, in terms of that capacity in the market, and it's not a huge capacity, it's a limited capacity. In an insurance context, we're talking about essentially PII, crime cover, and also D&O, correct? So that people just don't confuse consumer mass market with that type of insurance. Talk us through what that insurance is, please. And you're absolutely right. So if you're underwriting and you're an underwriter, the first two things you want to know is, do I understand the risk? And secondly, I want to make money, right? You're underwriting for profit. You're not underwriting to lose money. Nobody wants to lose money. Just tackle those 2 points for us if you can, please, Mark.
Yeah, well, it's as you say, underwriters are there to make a profit. And one of the major issues with crypto, fintech really, is there hasn't really been, there's no historic loss data, right, in the insurance market. So insurers don't particularly know what losses are going to look like. So and the definition of insurance is basically the pooling the funds of the many to pay the losses of the few. So insurers need to make sure that they're taking enough premium to pay out claims. The issue, therefore, is if they don't know what the claims are going to look like, how do you gauge the premium? So this is where we get to the likes of the underwriters that do write the cover or will facilitate writing the cover. The premiums are ridiculous because they overcharge it just to potentially back up any losses that may come in. Around capacity of the market, as we say, there's not many underwriters that write this type of business. The covers you mentioned are the professional indemnity, the directors and officers liability, the cyber, the crime. They're classed as financial lines insurance. Now, the financial lines market is fairly tough anyway and has limited capacity. At the moment, the insurance market is a cycle, and at the moment it's in a hardened state. So capacity is lower, less insurers are wanting to write business, premiums are going up. Some insurers have pulled out of the market altogether on various risks. So really, that it's kind of a perfect storm, and that's for general financial lines. Adds crypto emerging technologies into the mix. And as I say, it's a perfect storm where insurers just don't want to get involved.
Indeed, Mark. Thank you for that. So Steve, limited capacity in the market, hard market, high premiums being charged for the risk, and in many cases, the risk actually offers limited coverage, so you're not really getting what ideally you would want for that risk. You're the MD for Aon in Gibraltar. Aon have one of their White Rock flagship insurance companies based in Gibraltar. I think you were one of the first insurance companies to be licensed here. I think, if I'm not mistaken, I set it up in 2001. Talk us through what Aon in Gibraltar are able to offer DLT and crypto exchange clients in the insurance space. What is White Rock? What can you do for clients?
Okay. Yeah. So to put it in context, as my colleague said, it's a hard market at the moment. Underwriters, we're seeing premium increases year on year, 30, 25%, and it's continuing. It's happened for the last 3 years. There's a lack of capacity. So the underwriters are saying, well, we don't understand crypto. We're barely getting to grips with the cyber risks, with cyber fraud and ransomware. So we're not going to go into that space. We don't need to because we're getting the returns from our traditional lines of business. So as Aon, we have to find solutions for our big customers on this. And you know, insurance for some of our big clients is a must-have. They don't really want it, but they have to buy it. So to trade in many of the jurisdictions, if you're a crypto company, you have to have PI insurance, as you said. You have to have fraud insurance. And the fraud insurance will affect not just the companies, it can impact you as investors directly, because if your wallet's held somewhere, if they get a cyber attack and it's stolen or somebody internal steals it, they want insurance for it and they want cover for it to make you good again. So one of the things we have in Gibraltar is what's called a protected cell company, or a PCC, and it's an Aon-owned insurance company. But within the insurance company, there are cells, and by cells, it's like a ring-fenced mini captive that allows a company to insure their own risks. And the assets, the liabilities, and the policies can be issued by the cell and insured by the cell, and it's ring-fenced from other cells. It's a particular facility. White Rock itself doesn't take the insurance risk. The company in the cell takes its insurance risk.
Yeah, so just so that the audience understands, and you've explained it very well, Steve. So it's a company known as a protected cell company. Protected cell companies have been in a permanent feature now of the market. I think Guernsey was the first jurisdiction to establish PCC legislation. Gibraltar followed very quickly thereafter, and we adopted that, and White Rock was the first company. So essentially, it's a vehicle that allows business interests and corporate entities to self-insure. That's the word captive insurance, yeah. To self-insure risks. So it could be any risks to the market, but the type of risks that you underwrite through White Rock are corporate, non-consumer risks. Let's be
correct. So non-compulsory. We can't do things like motor or employer's liability.
Yeah. No consumer business, no statutory third-party risks. Have you considered underwriting risks through White Rock in Gibraltar or in other jurisdictions in the crypto space? Is that something that you've considered, Steve?
Yeah, I mean, we're insuring a number of the crypto firms. I mean, at the moment, in Gibraltar, we've got one cell that's owned by one of the crypto companies that covers the classes that you mentioned, because the market either couldn't offer competitive terms, or the other thing is that some of these companies are very good at managing their own risks, and they don't feel they're getting any value from the insurance companies by transferring them. In fact, they probably know a lot more than the insurance companies themselves.
Okay, so that means, Steve, so that we can put it into context. So I'm a DLT firm, I'm a crypto exchange. I can't find PI, D&O cover, or crimes cover in the wider market. Either it's too expensive, it's just prohibitively expensive, or alternatively, the underwriters don't want to underwrite that risk, or alternatively, the coverage is just not worth the paper it's written on. So it may be that the regulator requires you to have that type of insurance,
Or the
right?
state, yeah.
Yeah.
Or the
So
state.
to that extent, what we're saying here is that a crypto exchange will approach, say, Aon, and say to you guys, you offer this self-insurance solution. Can you house my underwriting risk through one of your cells? And just explain to us, please, what does that mean in practice? So why wouldn't I, if I were a DLT exchange, why wouldn't I set up my own captive insurance company as a standalone entity? Why would I want to rent one of your cells? Why would I want to do that?
I mean, you can set up your own captive.
Yes, but what's the advantage? What's the advantage in using your facility, your White Rock facility?
With speed to market, we can get one set up in a month to 6 weeks, whereas a captive in most domiciles will take up to a year.
Yeah. So just look at that. So if I wanted to set up a standalone insurance company, it will take me the better part of probably a year. So if I approach you, you've got an established company with a corporate umbrella that allows me to go into one of your cells, and you could do that within
4 to 6 weeks.
4 to 6 weeks. A huge advantage. Access to market.
I mean, we have
huge
set them up in
advantage.
48 hours before, but...
Sorry?
We have set one up in 48 hours before, in Gibraltar.
You've said, Steve, that the Aon facility doesn't take risk within the core facility, right? So you've got to close that risk gap. Explain to us, what does that mean? Yes. So what does it mean to do that, so that the audience will understand what sort of capital do they need to put into that facility to allow them to underwrite what is essentially their own risks?
Okay, so going back to the fact that the insurance policy is required by either the regulator or the states, they've got to have them. If a cell issues a policy for 10 or 20 million, it's got to be fully backed. So if a claim can be paid for 10 or 20 million, there's got to be 10 or 20 million, whatever currency you like, of assets in the cell. Or you can mix it between putting your own assets in, letters of credit, and sometimes companies go to the reinsurance market, the wholesale market, where there's more capacity and rates can be cheaper, so you can arbitrage, if you like, the wholesale rates in the insurance market. And you can mix any of those. But the key message is that if you're issuing a policy with a 10 or 20 million limit, there's got to be 10 or 20 million back-to-back cover.
But that's, Steve, that's huge flexibility, right? Because if I wanted to set up my standalone captive, I wouldn't be able to do that. I wouldn't be able to do the sort of things that you're saying we can do using a White Rock facility. And just to be clear, I could issue one cell, a £1 cell in White Rock, and I could have a combination of all, or just simply any one of these. So I could have a letter of credit to support the risk gap. I can have a capital support agreement as long as the capital provider is good for its money, or indeed I can have cash as share capital
or reinsurance.
Or reinsurance. I can have any of that.
Yeah.
And I will be able to do that within 4 to 6 weeks.
Yeah.
Steve, just one final question before I go to Aidan. It seems to me that how close are we, or are we indeed close, to being able to issue a policy in the insurance market of the type that you're suggesting, which is issued in a cryptocurrency, so the premium is issued in a cryptocurrency, claims are issued in a cryptocurrency, and indeed the underlying capital, that collateral that supports the underwriting risk, is also backed by a cryptocurrency. Is that a, I mean, am I dreaming here?
No, we're working on one at the moment, and it's for a wallet provider for their crime policy, where it's in Ethereum, and as you say, the policy limit, claims, premium, and the capital support, that will all be in Ethereum. In the cell concept, there's no reason why that can't work. The lag comes from convincing the regulators, and if you like, our internal risk committee, being a big corporate, that this is viable. But if the client's risk is in Ethereum, why would they want to hold it in dollars, yen, sterling, have a policy in that when they've got to pay out? Because then they'll have a currency risk on their policy. So it'd be far better if it's in a cryptocurrency all the way through.
But that's amazing, right? I mean, you've got cryptocurrencies just backing the entire underwriting cycle and the underwriting claims process. Steve, thank you for that. Aidan, when you and I had a chat, you really impressed me when you said to me, Nigel, in terms of asset recovery, it's easier to recover digital assets than it is stolen art. So I want you, please, if you can, just to talk us through that, because that's one of the things that I don't think underwriters understand very well. So that's the first point. Secondly, if you can, Aidan, I'm sure you can, talk us through, is it possible, are we likely to see the mass market, in other words, consumers taking out insurance to underwrite the risks that they as consumers care about, theft or just losing the digital assets by accident? Because there's a huge capital opportunity out there, not just for the crypto sector, but indeed for the insurance industry. Talk us through that, please.
Yeah, it is. It's something we discussed. I think that, as Steve rightly pointed out, there's a misunderstanding, and I think what comes with misunderstanding and lack of awareness is this fear. And if I contact an insurance company tomorrow and I say, I want insurance on crypto assets, it's usually, people scream, hide under the bed and run away. But what's the difference between insuring a crypto wallet and than a Jackson Pollock painting or modern art? So I think there's this enormous just gap in the market where we expect to see consumer insurance. I would pay $100 a year to have an insurance policy on my crypto. And there is this misunderstanding about the traceability of crypto assets. I find it astonishing that we will insure Rolexes and paintings, but we won't insure inherently the most traceable asset ever created in the history of mankind. So in terms of, if we have, we work with insurance underwriters to try and demystify the topic, and as everyone's mentioned, a lot of it is around training and awareness. And when you actually sit someone down and say, if a client steals a painting or fraudulently claims a loss, what do you do? What are the provisions? How do you ensure that someone isn't abusing the policy? Whereas with crypto, in seconds, we can see if someone has laundered their own funds, used a mixer service, if they have fraudulently created a loss situation. So the insurable risk, you can mitigate it right down because of blockchain analytics. So it's much easier. Like, think about the car insurance industry or the lost luggage industry. A lot of it is based on trust. You'll get the odd private investigator making sure that someone hasn't created some fictitious claim. So I think there is this enormous gap in the industry that the insurance sort of sector is missing, because if you understand how analytics work in crypto, it will immediately reduce the concerns around the exposure. And I think we see people like CZ at Binance predicting that sort of decentralized exchanges will topple Binance. The DEXs will take over in terms of sort of volume. So if everyone wants to have a MetaMask wallet and everyone wants to transact peer-to-peer, PayPal are in the space now, MasterCard, Visa are in the space now. If people want to transact peer-to-peer, what they want is basic insurance. I should be able to add on to my home insurance policy. Correct. I've got all of the other bolt-ons. I should be able to add on crypto. And I think there's an enormous sort of sector there that's not being tapped into right now.
Yeah. Aidan, do you think we're likely to see a market disruptor, right, in insurance and indeed in any aspects of financial services? And crypto is an example of that. Crypto was a disruptor for the traditional financial services sector, huge disruptor. Are we likely to see a disruptor coming into this space, into the consumer, the mass consumer insurance space, and saying, I've got the capital, I've got the expertise, I will do it, and take a huge market share?
I think I'll have an Aon here. I think people take comfort in the establishment. People take comfort in the sort of traditional companies, but there's no doubt if people aren't fast enough to move to the sector, there is this weird gulf. Like by a show of hands, who has worked at a startup or who has been involved in raising capital or knows companies raise capital? When were you ever asked as a crypto company what your due diligence was around your actual infrastructure? If a VC puts money into a company, they ask all the due diligence questions, they do all the normal take on. But we've investigated exchanges that have collapsed, and when you actually look into it, it's two guys and two laptops in a bedroom. Like, no one's asking the sort of basic, because again, a lack of understanding. So I think when you find companies that are starting to get into the detail, and we've seen a lot of crypto insurance startups coming into this space, once they realize it's actually quite straightforward to demystify the topic, it's quite straightforward to establish guide rails and say, if you do this, it's uninsurable. If you do this, then you're compliant. But so I think right now, I expect the likes of an Aon or someone will sort of figure it out and say, this actually is just an extension of modern art. It's just an extension of understand the topic, make sure it's not being abused. Like the profit incentivization, like you say, the capital market is just enormous. The sheer opportunity that, like how many individuals own crypto assets, and there's currently nothing. There is literally zero in terms of consumer insurance policies that aren't prohibitively expensive, as you mentioned. So I think the opportunity is there.
Thank you, Aidan. And Mark, when I look at this situation that we're discussing here in insurance, and I look at gaming and where the gaming sector was a few years ago, we had a similar situation, right, where the underwriters didn't really understand gaming, right? And there's some synergy between gaming and insurance, and some people say there's no difference between gaming and insurance. You know, Steve would disagree. I would disagree completely, but certainly there's a view to that effect. How did we get the insurance sector, or that sector in the insurance industry that has started to look at and underwrite gaming risks to get comfortable? Is there a lesson to be learned?
Yeah, absolutely. And it's kind of the same position as we were with the gaming a few years ago. So we worked with a firm over here when they were a startup, and they're huge now. But they basically wanted to insure jackpots. And it had kind of been done in the market before, but only in a small way. And these guys wanted huge jackpots that were scalable and can move up and down and this, that, and the other. And we went into Lloyd's with it, and the first thing that happened was we were kind of laughed out of Lloyd's with it. We had to go back to the client and again get under the skin of who the client was, what they wanted to do, what the systems, the procedures were, and go back and tell that story to the market, right? And once we've done that, you get to the stage where underwriters are comfortable and they understand the risk. They know where the claims are going to come from. They can gauge the controls and make sure that there's no fraudulent activity going to be put in there. So once they untangle the risk and they can lay it out bare and say, okay, well, now we know where claims are going to come from. Now we know what the quantum of claims are going to be. We can take the cover on. We can charge the premium for it. So we ended up placing that risk. It took us about a year to do it, and insurers in the end were paid quite handsomely for it because they were writing huge limits. They were taking huge premiums. And I mean, it's lottery, so the odds are fixed. So they could see exactly where the claims were going to come from and whether the claims were going to be likely. So they took the premium for that. So that was, it's going back to what we mentioned earlier, it's the educational piece. So if we can get in and explain this to insurance markets, and we can sit insurers down with face-to-face with the clients, which is what we do as much as we can, to get them comfortable with the risk and get them comfortable with the business and learn more about the whole sector. It's only then that we'll be able to move on. And we were saying earlier, someone will do this. An insurer will come along eventually and say, we're going to do this. We're going to throw our hat in the ring. We'll take the risk on, and there'll be a trailblazer. As soon as one does it, they'll all fall in.
Correct. Yeah, I think that's an important point, Mark. One of the themes in the books that I've published, and it's a theme that goes right through the 3 books, is the concept of jurisdictional competition. What does it take for jurisdictions to remain competitive? And one of the terms that comes out throughout my writings is the herd instinct. All it takes is for one big known client to come into the jurisdiction, and then others will stand up and say, well, if it's good enough for them, it's good enough for us. Without wanting to mention names, and I'm not going to do it, the example that you gave is in the public domain. It's publicly available information that they set up a captive solution within a cell of a protected cell company in Gibraltar. Steve, if I may, one of the things that we're trying to do in Gibraltar, and I'm advising the government of Gibraltar on this currently as a policy advisor to the government, is to see what areas within the financial services sector, and includes crypto, what areas can we improve, what areas are we required to be more competitive, and what areas can we innovate in that allows us to be at the cutting edge, very much and very similar to what we did in insurance. very much the same as what we did in gaming. I mean, gaming is a huge industry in Gibraltar. We've got the gaming regulator here, a man of huge standing and reputation internationally, and indeed in the crypto space. And one of the things that we're looking, Steve, and I know that you're involved as well in these discussions with the government, is to say, okay, Gibraltar has UK market access. One of the things that we negotiated, the Gibraltar government negotiated very successfully with the UK government, was to preserve that common market between Gibraltar and the UK in those areas that were and had the benefit of passporting arrangements, which clearly exclude crypto. And we are required to match UK standards of regulation. So when we looked at this, we asked ourselves the question within the policy circle, well, if we are required to match UK standards of regulation because you're obtaining a benefit because you're selling to UK consumers, or in the area of insurance, you're underwriting a UK-based risk, by definition, if you're not underwriting UK business in any shape, way, or form, you can then have your standalone, in this case, insurance captive regime for non-UK captives. And you can do very much what we've been doing in the DLT sector, aimed internationally, and have our own regime outside the Solvency II regime, which is clearly a European directive, which we are required to implement, notwithstanding that we've exited Brexit. Just talk us through the importance of that briefly, if you can, Steve. The opportunities for Gibraltar in this captive space, because what it might allow us to do, Steve, is to set up insurance solutions for crypto clients or clients in any other business sector in a much faster manner, because we will be excluding Solvency II, essentially. Just, can you talk us through that?
I mean, I think at the moment, the thing that takes the time and the capital and the expense of setting up an insurance company is the Solvency II regime. And I think with the government and the regulator, we need to look at something else. If a company is only insuring its own risk, there's not third-party consumers at stake, they need to, and it's their loss, and the example I'm giving, is fraud or PI. If they could, all the regulator needs to do is to be clear and in their own mind that the company can pay a claim to themselves, as long as it doesn't impact any third parties. And if that could be in a cryptocurrency, less capital, I think any of those would work. And I think Gibraltar needs to look at itself, be perhaps a bit more sort of friendly to insurers, because we've been losing ground to other domiciles who are looking at that at the moment.
Yes, and the government is extremely sensitive to that, as you know, Steve, and we are working very hard to ensure that we don't fall behind on any of our competitive advantages. Aidan, you've worked with law enforcement agencies in Gibraltar. Do you want to talk a little bit about that, please?
Yeah, but it's also echoing what Mark said. I think that the summary point of all of this is just information and awareness. I think where Gibraltar has an advantage is there has been that appetite in the past. We see the same with Bermuda and others. Gibraltar was the first place that sold the boat that was linked to the Russian sanctions recently, and Gibraltar isn't afraid of sort of making headlines. And I think that we talked about that fast follow mentality. If you do it, everyone else will follow. And for me, I still find it astonishing that when we ran the UK's first Bitcoin seizure, a drug dealer gets all of his Bitcoin seized, and I'm ringing the insurance company saying, can I get insurance for this? Ledger wallet? No. But it's in a safe alongside diamonds. Are they insured? Yeah. Is the gold bar insured? Yeah. I'll insure the painting and the car, but I'm not insuring the crypto. And it was just a hard no. And then that was 5 years ago. We got one of the first policies in the UK. And I think you're right. I think the first time someone just says, if you have a MetaMask wallet, we'll insure the first $1,000. The company that does that, that will just sort of turn on everything. And I think that what's unique about crypto is that crypto enforcement, if I'm investigating a crypto case, it's where the company or the exchange is domiciled. So we have cases now where an individual is running a massive Ponzi scheme. They've got a crypto, they're running a huge crypto exchange. That exchange could be registered in Papua New Guinea. That means that all my enforcement activity, I have to serve all my notices in Papua New Guinea. I have to get my order recognized in Papua New Guinea. I have to get local law enforcement to do the seizure in Papua New Guinea. So I think where Gibraltar and others have an advantage is that having an awareness of this ecosystem means that internationally, from a FATF standards point of view, there's a comfort when there's enforcement activity because you know the sector. And if I want to come and I want to, if there's an exchange that gets into difficulty internationally, there will be certain countries that you can almost relax, and you know that law enforcement here, the legal sector here, knows this industry. Whereas there's still lots of sectors, I think the previous panel talked about it, there's over 50 countries in the world that have zero, and I mean zero, in terms of blockchain analytic capability, enforcement capability, regulatory capability. So there's those gaps around the world that that FATF and others get concerned with, because it creates like regulatory arbitrage for money laundering, for all of the sort of bad things that the sector wants to avoid. And I think Gibraltar is in a very good position because it has been at the sort of vanguard. I remember going to the first OECD blockchain policy forum in 2017-18, and it was Bermuda, Gibraltar, Malta. There was sort of 3 or 4 smaller geographical jurisdictions, but they were certainly sort of punching above their weight in terms of, I mean, the UK still hasn't got a regulator. In terms of, there's a crypto registration policy, but there's no regulation. So I think that the smaller geographical jurisdictions can maintain that head start and be the place that insurers come to, that exchanges come to, because there is that knowledge. Whereas right now it's the sort of FUD mentality that people just don't understand it and they run away, and I think they're missing big opportunities because of it.
Excellent, Aidan. Can I ask our panel members just to give a brief summary around some of the issues that they've heard? Maybe you want to comment on what somebody else has said. Let's start with you, Mark.
In terms of
just your own summary of whatever you've said or what others have said, or where you think the market is going to be in a few years' time.
Yeah, so I mean, I guess in summary, it's that, I mean, the insurance market is hard to get this cover at this moment in time. But as we've said, it's getting better, and I've no doubt it will continue to get better. And it is, I mean, I keep saying it. It's down to the educational piece. So as soon as you go in and speak to an underwriter and talk about crypto, then they immediately think of, well, it's Bitcoin and it's used for criminal activity, and there was that Silk Road thing, wasn't there? And it's getting away from that. When you sort of sit down and explain to underwriters, well, actually, if you look at all the crimes that have ever happened, probably 99.99% of them have all been with cash. So fiat currency is a hell of a lot more dangerous than crypto. So in summary, it's tough. We're getting there, and it's testament to people in this room, really, and people in Gibraltar and the businesses that set up here that sort of blaze the trail of emerging technologies. It allows us to go and try and open up insurance markets and open up the UK markets a little bit more to this. But again, the more we can build ecosystems and educate insurers, educate underwriters, then the easier the markets will get, and premiums will hopefully come down and capacity will increase. So that's the absolute dream. How long that takes is anyone's guess, but that's I guess where we are at this moment in time.
Thank you, Mark. Steve?
Well, I think that if the traditional insurance market doesn't respond, I think you'll see a market disruptor come in. If people want to insure something and get paid out in a cryptocurrency, if they want to pay their premium in a cryptocurrency, I think you'll see, and there's a demand for it. You know, if you believe in capitalism, or frictional capitalism, which I do, someone will come in and offer it. And I think that will be the big change. And I think you'll see consumer insurance coming in because someone will, and there's plenty of money out there for investors. There's plenty of capital available still in this, even with all the problems going on at the moment. So I think someone will come in and disrupt it. And you saw, you know, and there is a historical case for that. I mean, a few years ago, or probably a couple of decades ago now, we all used to buy our car insurance, household insurance from a broker, certainly in the UK and the US. Now everybody uses a market comparison site, such as Compare the Market. And
80% of the UK personal lines market is done.
You know, and they can take a very low margin. I dealt with them at one stage, and they were looking at making £7 to £15 a policy, really cutting the margins to benefit the consumer. So I think if there's a demand, you'll see a disruptor come in.
Excellent, thank you. Aidan?
Yeah, I think we'll be sitting here in 5 years' time, sort of laughing about the fact that you remember when you couldn't get insurance on your personal crypto sort of holdings. There's so many sort of interesting like new verticals. One of the projects we're doing at the minute is, I'm an ex-criminal tax inspector. You can get insurance on the risk of a tax investigation. So now one of the insurance companies is, well, all of these companies, all of these VC-backed startups are all worried about regulators, they're worried about hacks, they're worried about ransomware. But why not have an insurance policy for the cost of a hack, the cost of the investigation and forensic recovery action. So we're seeing these niche verticals sort of start to appear. And I think that it'll just be an extension of your home insurance policy, that you'll be able to have that as peer-to-peer grows. But as Steve mentioned, I think that it'll take the incumbents, because we're all used to Visa chargeback. We're used to all of these traditional finance sort of benchmarks. And I think when you see, if PayPal comes in and has a wallet, no one will care if it's 3% transaction fees if there's insurance.
Correct.
Like, consumers just want convenience. Like 11 out of 10 times, I think someone said the other day, people will choose convenience over anything else. So if I have a crypto credit card that gives me some form of insurance and something else, I'll choose that over a basis points difference. And I think that's where you'll see either a confident incumbent, or if you're a local startup and you're looking for an idea, do insurance and crypto. I think it's going to be the next big sector.
Ladies and gentlemen, I think these guys have been superb. A round of applause.